Leslie, it's great to be here. I'm going to make myself 10 years younger and say 25 years, but David and I have been doing this a long time. And we could have been having this conversation 15 years ago, honestly, and we probably did have it on CNBC. Look, I think China at one point, and certainly for the last 15 years or so, has made it a point to try to elevate their markets and their companies into a global standard. They care about having access and being seen as a reserve currency, as a deep marketplace, and that their markets are freely tradable. They're trying to get the MSCI on board, and they've done a lot. It's why what we're seeing over the last couple of weeks, to me, is I can't say I'm surprised. And I'm sure David spends a lot of time also on the political flow, can speak. But look, Xi Jinping has cemented his role as dictator, even in a world where China's never been a true democracy. There have been many more democratic forces than there are today. I think we started to see the U.S. push back against China in the Trump administration. I think the Biden administration will be at least as antagonistic. By the way, I don't think this is a Republican versus Democrat, or if anything, I think the Dems are going to be a little bit stronger on China. But this is really about control of the 21st century of technology. And, 15 years ago, we were saying that oil and gas and natural resources were the strategic importance and what nations were really fighting to control. Data is the new oil. And I think that's what we're seeing. And China is fighting to be in the game and possibly believes they should be leading the world of cyberspace, internet technology, infrastructure, tech infrastructure, chip infrastructure.
David, it sounds like you actually agree with Jim in terms of avoiding China altogether when it comes to investing. Does that include U.S. multinationals with a large presence in the region? I mean, how is it that you actually get exposure to this growing economy, the second largest economy in the world?
Yeah, thanks for addressing this very important topic, and great to be here with you, Tim. I'm very concerned about ratcheting up tensions between the U.S. and China. Investors in the U.S. Trying to invest in the Chinese growth story are getting hit by Beijing and by Washington. The U.S. Congress passed a law at the end of last year that threatens to delist Chinese companies, or any foreign companies, but really focused on China, if they don't comply with new U.S. Tighter audit rules. And the fact of the matter is that Beijing gets what Beijing wants. They do want to dominate internet traffic and telecom and data security, but they definitely want to dominate it at home, control it, own it. They forced Alibaba to divest their consumer financial scoring system to a publicly a government entity last year when they took on Ant Financial. There's no reason they can't do the same thing to Alibaba, taking away their cloud computing or anything that they feel like doing. This is death by a thousand cuts. I think you're going to continue to see pressure from Beijing as they're trying to rein in more and more of these businesses before they get too large. Now, it's not just Beijing that's concerned about data security. Facebook is hauled in front of the U.S. Congress, it seems like every other week. And then Amazon, of course, just got fined $900 million this week for a privacy issue in the EU. So everyone's got their eyes on big tech. China just has the levers to manage this the way that they see fit. I think that people could buy exposure to China through exposure to commodities. The Chinese growth story is real. It is happening, and it does take commodities. So that's one way to get it. Also, if you own some of the very many U.S. Mutual funds that own A-shares are the stocks in Chinese companies that are traded in China. And all the major brokerage houses have mutual funds that trade A-shares. That way, you're getting exposure to the growth story without taking the risks of being on the wrong side of some nationalistic move by Beijing, where they start to target Nike and Starbucks and Apple, Tesla, as they have recently, in the interest of championing domestic players in those same spaces. So I'd be cautious right here. I'd use commodities and some of the A-shares as a way to keep up exposure.
Shepard Smith here. Thanks for watching CNBC on YouTube.